I would say a good one is a company that regularly reconciles their books, that performs deposit verifications, cash reconciliations. I think a lot of folks rightfully focus heavily on the P&L. Are we making money? Are our revenues where they need to be and our expenses where they need to be? And that is very important. But a lot of times things can get lost on the balance sheet. And until you can ensure that all of those balance sheet accounts are properly reconciled and are reconciled timely, you really can't say that your P&L is solid, because a lot of things could get hung up on the balance sheet that should be perhaps running through your P&L on an annual basis.
Welcome to the Financial Advantage with GSS.
Hey guys, welcome to another episode of the Financial Advantage. My name's Nick, and I am super happy and very excited for our next guest. Her name is Kari Maui, and Kari is an assurance director over at GBQ Partners, and she's from Cincinnati, Ohio. And what we're going to be talking about today is audits and how the powerful collaboration of teams in the financial back office make an awesome audit. So we're going to be talking about audits. Kari, how are you?
Hi, I'm doing well. How about yourself?
Oh, I'm stressed out. I'm very stressed. And I'm very excited to talk about audits. Obviously, I told you this before, but even though I work for a financial firm, sometimes audits to me are a little bit confusing in why they're needed. Are there different levels of audits, and why are they needed in the hospitality industry?
Yeah, so there are not different levels of audits, but there are different levels of assurance. So we could do audits, we could do reviews, we could do compilations, and normally they're related to or have to be done because of bank debt. A lot of bank agreements will require, or lending agreements of any kind will require an audit or some level of assurance, usually based on the number of dollars being borrowed and the guarantees that are associated with that debt. So the more you borrow, typically is the higher level of assurance that is needed. So we do a lot of audits, a lot of reviews, and to a much lesser extent, some compilations.
Got it. So real quick, audit is very detailed. A review is semi-detailed, reviewing the financials and the numbers and the debits and credits. And then a compilation, what's that?
So a compilation is essentially just taking your financial statements, high-level gut check to make sure that things look reasonably stated based on our knowledge of the industry and our knowledge of GAAP accounting or tax basis accounting. And we put the financial statements into our own format, consistent with industry standards, and then pretty much wrap that engagement up. So they're the very limited level of assurance on compilations, whereas, like you said, reviews, we do a lot of inquiry and analytics for review engagements, and then deliver a full set of financial statements at the end of that. And then for the audit process, it is very detailed. Lots of support requests.
Okay. So having to do one of these three options, is it basically forced because of debt? Or is there any kind of benefit to doing it, even if you're not forced to doing it?
There's always a benefit to doing it. I would say most people do not have them performed unless it is required by debt, or a board of directors or PE firms sometimes will require them. I think it's a best practice to have at least a review engagement, just so that you have some level of assurance that someone else outside of the company is reviewing your information.
Okay, got it.
And I think that they can give ownership and a level of competence, knowing that somebody outside of the company is looking at their accounting records.
It's like a third-party check, that making sure all the I's are dotted and the T's are crossed, and then you guys put your stamp on it and saying these are official, reviewed, and good to go.
Yes.
Right.
And I would add that another benefit to having them done, having some level of assurance done on a regular basis, would be that when the time arises that you need an audit for, whether it's for a transaction or to obtain debt, if your company has grown a lot over the years, you could have been doing something wrong per the accounting standards for years and years. And sometimes it's better just to get those things cleaned up and fixed for newer companies from the get-go, and make sure that your team is doing things the correct way in accordance with the standards.
So I apologize, I didn't ask, okay, what's your role, what's your background, what's your history? So what's your experience with audits? I know a little bit of your history, but for our listeners, how long have you been doing this?
Yeah, I've been doing it about 20 years, primarily in the restaurant and franchising spaces, across between a couple of different firms, but currently with GBQ.
Nice. So 20 years in the restaurant world.
Yeah.
That's been fun, huh?
It has been. We've seen a lot in the last 20 years in the industry.
Yeah. So what, this high level, like what makes a good audit and what makes a bad audit or review or compilation? What's a good one? What's a bad one?
I would say a good one is a company that regularly reconciles their books, that performs deposit verifications, cash reconciliations. I think a lot of folks rightfully focus heavily on the P&L. Are we making money? Are our revenues where they need to be and our expenses where they need to be? And that is very important. But a lot of times things can get lost on the balance sheet. And until you can ensure that all of those balance sheet accounts are properly reconciled and are reconciled timely, you really can't say that your P&L is solid, because a lot of things could get hung up on the balance sheet that should be perhaps running through your P&L on an annual basis.
That's that's a good point. That's one thing we do as a firm is we reconcile the balance sheet monthly, minimum. Some people do it quarterly, some people do it yearly, but we do it monthly just so it makes our lives easier on the P&L side, and then it just rolls up and there's no surprises, no corrections, anything else. But what that's doing on the back end, it's also making your life easier.
It is. It's much easier.
There we go. That's cool. That kind of rolls in. So for our listeners out there, how we know GBQ, how GSS knows GBQ, long story with some accounting firms and some relationships and networking out there. But GSS, we don't provide audits or assurance or any kind of tax consulting. Most people know what we do. So what we do is we refer companies like GBQ to come in and perform an audit when it's needed. And there's a specific client that's a mutual client of ours that came across the table, and they had a bank, it's called a covenant, where they had to, hey, the bank is demanding that they do an audit, and they were looking for an audit partner. And we introduced you guys, and you guys came in and worked with their financial team, which is also us, and we worked pretty well together. Yeah. And why do you think that is? Why do you think we work pretty well together?
I think because your team has a very good understanding on what it takes to get an audit completed. I think you have significant experience working with other companies that have been audited in the past, as well as just knowing the day-to-day operations of a restaurant company so that you know the risks, what could go wrong if things are not timely or properly reconciled. And because you are able to do those reconciliations and they're done timely and correctly, it just helps for a cleaner audit process.
So you would say we help bridge any gaps with communication and just overall work that needed to be done or questions that need to be answered to help your process?
Oh, absolutely. Yes.
Okay. Explain to me why, obviously you ask some questions and we answer them pretty quickly, right? And then we have the experience to take a look at it. Can you share just an example of how a bad audit would look and what it does for your client and for you guys?
Yes. So I would say the number one thing is it adds a lot of time for us to work through a bad audit, and time equals money. So it also transitions into a significant additional billings. So what that would look like is we send over a list of things and we say we need these items in order to conduct our audit. And if those items are not ready for us when the audit starts, that could cause problems. Or if we are given support that doesn't tie out to the trial balance, or things are not properly reconciled, that causes us to dig in further, spend additional time, and as a result, creates additional billings. It also could lead to not meeting the bank deadlines, which could cause additional fines or penalties from the bank to get debt covenant waivers processed, attorney fees for those covenants. So it really could lead to just significant additional spending.
And I know I'm removed from the actual work side of things. I'm not in the weeds and crunching numbers. I'm not an accountant, but I know like when we do audit support and work with firms like you, and there's a bunch of questions and a bunch of corrections that need to be made, we do the same thing. Hey, this is significant level of effort and work. It's above and beyond our scope. We're going to have to assign some resources to this, and obviously that equates additional spending and additional time. And it just becomes a big avalanche of a nightmare eventually. Okay. So you said communication, clean books. Seems pretty simple. Is there anything else that you would say would like the efficiency side of things and during a process like this?
I think that your team owned everything. So it wasn't that we had to go to 7 different people to get questions answered or to facilitate asking for additional support or requests. It could all be funneled through 1 or 2 individuals. One person owned the entire process, took responsibility for making sure we received what we needed, had our questions answered, and that things were delivered timely. And I think that was a huge gain for efficiencies throughout the audit process.
So like a standard point of contact that knows what they're doing and that's accessible.
Yes.
Perfect. Okay, cool. What?
And I think for both sides, I think we speak a lot of the same language. I think that your team, given its industry and experience, and our team, given our industry experience, I think we're talking the same language from both the restaurant side of things, but also the accounting side of things. And I think that really helps. It wasn't us training your team or your team training us. And I think just through that synergy, a lot of efficiencies can be gained.
So best case scenario, every hospitality company uses GBQ for their audits and GSS for their bookkeeping.
Sounds like a beautiful thing.
So we've got a formula down and we understand it. You understand it. So that brings up a question for me. Say a client comes to you and we don't know about it, but they're a client of ours. And they say, hey, how are your books looking? They're like, oh, I think they're pretty good. We work with a firm called GSS. Do you guys go, awesome?
Absolutely.
Yeah. And then when you do, is it, and this is for my mind, do you go, oh, GSS is in there. We know it's going to be significantly efficient and it's going to go pretty good. Obviously, there's going to be challenges and hiccups and bumps and whatever. But do you go and look in there and be like, we can lower this price and be more competitive?
And sometimes, yes. Yes.
Yeah. Okay. So there's a benefit of using, okay.
Yeah.
Huh.
I would say 2 questions we always will ask when we are talking with new clients. Is your accounting in-house or outsourced? And if it's outsourced, who do you use? And
Okay.
those are big tellers.
And then, so that brings up a good question. So could they have the same challenges in-house versus out-house, like out-of-house?
Absolutely.
So like, yeah, so the communications, the point of contact still can be a struggle, even if they have a full staff that's
Yes.
working with you. It could still
Yeah.
pretty much work the same way with an outsourced, if not the same. There could be fragmentation. There could be, what the heck is going on here? And you're not really doing this the way it should be done. And there's a lot of questions. And see,
Yes.
I'm learning. Oh, okay. So obviously, so it's basically the more you do it, the better you're at it.
Yeah,
And
absolutely. Yeah.
more experience and all that good stuff. Okay. So what beyond the trends, not the trends, beyond like the covenants from the banks, and in bookkeeping and monthly period-based accounting that we do, that we mainly focus on, there's a lot of trends and a lot of technology that's being introduced and a lot of automation, and it seems like it's just ever changing in our world. Is there any trends in the audit world that you guys are seeing? What's going on in that space?
There are a lot of trends. I would say similar as it relates to AI and technology and how we can audit more efficiently and more effectively by using different technologies. I think that we go to industry conferences and there's lots of vendors there every year selling different AI products, selling different lease accounting products. Those all typically have, and there's another side of them a lot of times that could help out on the audit side. So depending on the different vendors that companies are using, it could heavily impact the audit process for sure.
Okay. And I'm assuming these AI companies are trying to say, hey, you don't need people to do your audits anymore. Is that what they're trying to say?
Not so much that you don't need them to do the audits anymore, but I think that they could make the audit process maybe more streamlined with the technology that they have. On our side, it's more so how we can audit more efficiently by using different kind of data analytics.
Yeah. That's what we battle all the time. These software companies are going to the end user and saying, oh, you don't need a person in your accounts payable division anymore. Our system does it.
Yes.
And you're just like, that's not true. You still need somebody to drive the bus. the bus is getting easier to drive, but you still need somebody to drive it.
And to review the outputs, review exceptions. Yes.
And software is not, I use that, what is it, ChatGPT once in a while. And I'll like type in, hey, what's the NFL schedule this weekend? And it'll be wrong.
Yes.
It'll be like,
Yeah.
no, the Raiders do not play the Packers. Like what? So it could be wrong. So you
Could
need,
be wrong a lot.
yeah, you need expertise, you need knowledge, you need review. Obviously you can use tools to make it more efficient, but you still need people. So
Yes.
good. And we got good people. So that makes sense. So the trends are similar to ours, technology. We talked about collaboration within the audit process. How do you establish, say you get signed up and you get told that there's an outsourcing company that's involved. What's your first thing you do to get introduced and to start a collaboration with that outsourced firm?
Yeah, that is step one for us. We want to get in touch with that outsourced accounting firm as soon as possible. A lot of times we'll even have them on the proposal calls with us if they are an outsourced CFO role, like I know you guys are a lot of times.
Mm-hmm.
So then we are in contact from day one, even through the proposal process. That's our preferred approach, just because throughout the proposal process, we do make a number of assumptions. And as the outsourced CFO, you can confirm those assumptions or say, that's not right, we do this and this differently. That can heavily impact the fee during the proposal process. And so I think by having you guys on board throughout that process, it can help make sure that there are no surprises through the proposal process, through the fee process, and through the billings process of the audit. And then on a similar note, once we are engaged, then we like to immediately get scheduled, interim time, planning time, and then the audit timing. And so by having you guys engaged from that day one with us, we can build out our request lists, talk timing, make sure that the timing agrees with both parties so that we can meet the end goal, which is issuing before the bank deadline or whatever the driver of the audit or review is, but also make sure that there's plenty of time for all parties to get the books closed at the end of the year and the request list turn around quick enough so that we can meet those deadlines.
I love that. You're bringing in the team from the beginning before you even send a proposal so you can eliminate any assumptions, and that proposal is pretty rock solid. And you're going, before you even hired, you know what you're getting yourself into.
Yes.
I like that.
Nick, I don't like surprises. The more I can be planned for, the better.
My operations team would love if I was able to. I do that at some level. I'll bring in like our GM of operations to a call, and then she'll start to ask a bunch of questions that are very detailed. And now I understand why she's asking those, is to, hey, if we do get signed up here, there's no surprises and it's not a can of worms. And in my mind, I'm always like, she's trying to block the sale here. What's going on? Like, it's a done deal. Like, just whatever it is, when we sign up the agreement, we'll find out. Like we'll find it out. But now I get it. Oh, no. You taught me something, and now, all right. Bring our operations to more, especially the higher level sales calls that we've been involved with lately. For years, we've been stuck in the debits and credits world. It's been like, and it's very commoditized, technology's heavily entrenched into it. And what we've positioned ourselves is we are more of a financial leader and a financial complete back office. And it becomes a much more detailed, and I say this all the time, and I hate saying it, but it's intimate. It's an intimate process. It is your financials, it is your money. And we have to start thinking like that throughout the whole entire process from beginning to end.
Agreed.
You taught me something. Okay. Thank you for that. I'll do that more. But then after that, so you bring in the leader or whoever it is, and you eliminate assumptions. You prepare yourself for a well-detailed proposal. And then in that proposal, are there timelines?
There are usually timelines built out in there. But then once we get accepted and during like the onboarding process, we usually will have a kickoff call or a planning meeting where we go over those deadlines again, just to make sure that all parties are in agreement on them. And I think that really sets the stage for then the process as a whole. And I think an important fact in that process is making sure that everyone knows that we're all aligned, that we have the same end goal, that just because we're the auditors, we're not scary. We're not here to find trouble. We're here to be an independent company that can issue an opinion on an audit. But we are ultimately working on the same side. We're on the same team. We all have the same goal in mind, that we want this audit to be wrapped up by whatever the date is so that it's on time. And I think that is a very key piece of it, is knowing that we're all rowing in the same direction.
It leans over. You're not the scary people.
We're not the scary people.
You're in there to actually help, believe it or not. And I understand that, though. Like, when you go into a process like this, you're probably thinking, say, if you're being demanded from your bank, from your debt carrier, hey, we need you to review your books to make sure they're legit. And then you go in there and you're like crossing your fingers. I hope there's no surprises. I hope
Yes.
these profits are good and the taxes are paid and we're good. But in some cases, specifically in the case that we've recently worked on with our client, the mutual client, we went in there and we found efficiencies. We found the ability to change some things around and make them in a better position. And it wasn't the big scary guys. It was, hey, there's the pot of gold at the end of the rainbow here. At least that's what I'm getting out of it. We're positioning, this client in particular was a little bit behind the eight ball on some things with their current restaurant units, and they're behind on some bank covenants and compliance issues and whatever. Step in, you guys, step in us. All of a sudden we flip to 180. We're getting back on track. The banks are happy. They're starting to loosen up the strings a little bit, and they're going to be able to start scaling again. And if they don't scale or grow, that's fine. Now they're going to be profitable, at least
Yes.
better than they were.
Yes. And making decisions based on more solid information, more solid financial information.
Instead of just living out of the bank accounts and saying,
Yes.
do I have enough for payroll this week? Do I have enough to pay this vendor this week? And I've been there.
Yeah.
It's not great. You're like, oh boy, we had some overtime this week. Hopefully I can cover that.
Yeah. And there's just so many years in the industry, the restaurant industry space, where there are such great years that you don't have to be as detailed on it. And I think people get caught up in those great years because the cash is flowing, and then there are years, I guess, where the economy is like it is right now. And that's when I think people really realize the importance of having solid financial information.
I remember this. There's so many other things you can't control in the industry. I remember, so I had a smoothie chain, and I remember there was this huge listeria outbreak with strawberries, and 75% of the smoothies we made had strawberries in it.
Oh my gosh.
And we're like, all of a sudden we saw a massive decline in smoothie sales, especially ones with strawberries in it. And we're in the middle of Wisconsin. And I was like, how did this affect us when is this a nationwide fear? And I was like, whoa, I remember this. Our sales dipped 30% over 2 weeks. And it's like something you couldn't really plan for. But with good books and a good team in place, you were like, this is just a bump in the road. We've got this covered. We got to figure it out. Awesome. So you're out in the world looking for people that need audits and need audit partners.
Yes.
Who are you looking for specifically?
We work with clients across the country. I know, much like you guys, we have both developed models that work really great remotely. We don't have to be in the same city with the restaurant client we're working with, which I think is great. I think that we're looking for franchisees, franchisors, growing concepts, or concepts that are maybe not growing at the moment, but might be looking to in the future. We work with independents. We work with anything from fine dining to quick serve. We really run the gamut across the industry and across the country.
So super similar to us.
Yes.
I mean, we do get a little nitpicky when it comes to some clients. We say, it might be a little too small, and it's just something that we don't have the resources, or we can't make this a priority. And since we can't make it a priority, we don't want to put our name behind it. We want to give them the full GSS model. And sometimes there's some clients that come across that's just too big too. And we go, we would love to be able to take this on, but right now we just don't have the ability to take it on. That's happened once or twice. The scope was just too big and too large. And you're like, whoa, this is going to pull us away from everything else and putting your eggs in one basket type of a thing. And so we stay pretty focused, mid-market. That's our niche, and that seems to be the best niche for sure. Okay. Is there anything, so we talked about, hey, audit could be the big scary bad boys coming into town. Is there anything like you wish potential clients or current clients should understand better when thinking about firms like you guys?
Yeah, I think that the one thing that we always say is that preparing for an audit does seem scary. And I'm not going to say that it's not a lot of work because it is, but truly do believe that probably 75 to 80% of an audit is truly just reconciling your accounts. It's us just auditing some reconciliations. And so to think that you could be 70 to 80% of an audit, your audit request list could be done by simply reconciling your accounts, I think speaks volumes of the importance of the reconciliation process. And I think that a lot of people don't put enough emphasis on those reconciliations and the importance of them.
Yeah, and that brings up a good point. That's why a lot of people are starting to ask me, what's your reconciliation process? 5 years ago, I didn't really answer that question a lot. It was always, when do you deliver financials? When do you deliver financials? Is it 5 days after close, 10 days after close? What's that process look like? And now it's starting to flip. It's starting to say, what's your AP process and what's your reconciliation process? That's weird to me. And that's been just our table stakes going into the finance game is bad reconciliations and bad AP creates everything else bad. So you got to get that right. And it doesn't take accountants to do that. It just takes experience and good people knowing what they're doing to do them.
Absolutely.
Yeah. All right, cool. What's your vision for future audit collaboration in the world? Like in 10 years, where do you see hospitality audit and assurance world going?
Yeah, I think that it will continue to go more down the AI and automation path, but I think it'll be more so driven based on exception reporting. I think we're going to start, instead of doing as many detailed tests, we're going to do more analytic analysis or exception reporting by looking through the general ledger to say, typically we see transactions like this recorded on these days, or so show me any journal entry that was made by someone that doesn't meet this set of standards that were communicated to us from the client, so that we can look for the exceptions and find the outliers and target our risks and our audit procedures accordingly based on that exception reporting, which I think is in some ways available to clients on their side as well to do some of those kind of monitoring controls. I think the important key there is that we still have to have people that can review those exception reports and work through those analysis. So I think that it will continue to transform that direction. I think that it will just phase in probably over the next 5 to 10 years. I think we've already seen a lot of it start to phase in over the last couple of years, and I think that it will just continue down that road.
So it's more of, if X equals Y, put a flagger on it so our eyeballs can see it, instead of having somebody come through 7 months worth of journal entries. And it'd be just like, okay, cool. And this is why we're looking for it, because we're doing the analytics on the back end of it. And it streamlines things. Got it.
Yes.
That makes a lot of sense. Yeah. And we use some of those tools for sure. But also too is now when you're going through the audit process, what we use software for onboarding, and it's a collaboration tool, and we lay it out and we say, hey, we need access here, but then we give a username and login to the client. So a task will come up, and then they've got to click on it or upload something to the software, and then next task, it comes. And then we meet with them once a week to make sure that everything's going well. If there's any additional questions, then we start introducing the team. But there's visibility into the process. And it's also accountability, which is probably the better thing. And then when we get to the stage where we're doing their period-based accounting, our clients are loving the visibility into what we're doing. So dashboards, charts, reports, etc. Instead of just waiting until 5 days after the month closes, here's your report, boom. Is there visibility into the audit process?
There is. We have an online portal where we upload basically a list of all of the requests that we need throughout the process, along with the due dates or the deadlines that we need them by. And that is something that could be reviewed at any time by any party of the engagement team. And it tracks things of, these requests have been filled, these requests have not been filled, these requests are overdue, these are due in the next 5 days, those kinds of things. And you can sort it based on who it's due from, who owes us the request. And that allows you to see the deadlines in 3 days. Have all the requests been filled? Or the engagement starts in 2 days. Have we given the auditors everything we need? So any party of the team can see that at any time.
Is there like a pie chart of like completion to finish?
I don't know if there's a pie chart. I think maybe a bar chart. There's colors for sure.
I like having a goal. I like going, all right, you're 70% there. And you're like,
Yes,
all right,
like
we're getting somewhere. We're getting somewhere.
I think the open requests are red, partially filled maybe are yellow, and then fully filled are green. So you just want to see a lot of.
Yeah, green's good. That's how we do
Green's
it too.
good.
Green's good.
Yeah.
Green is good. Very cool. So we're both heading. So when this episode drops, we're obviously it's going to be past, but we're both headed to RFDC, the Restaurant Finance and Development Convention. And this is a convention where restaurant groups, franchisees, technology firms, tax audit firms, outsourcers, everybody in the world of finance and restaurateurs come together and we talk about the next big great thing. People are trying to get money, people are trying to refinance, people are trying to hire audit people, people are trying to do a whole bunch of things. It's super, super exciting. But like I said, this is going to come out after it. So what I do is I hope you have an awesome convention, but I want to ask you a question. What are you looking for to get most out of this year's convention?
This is my favorite convention of the year. I love the ability to talk and connect with so many people in the industry, specifically clients, referral sources like yourselves, other industry professionals that just have lived in the space for so long. We build such great relationships with each other that it's nice to get together and see each other face to face once a year. I am very much looking forward to seeing the people.
Same here. It's our Super Bowl. It's like we've been all practicing like in all different areas of the country and all doing things for a common goal. And then we come together and have this big celebration and collaboration. We talk about trends in the future and clients and referrals and what's going on with this group, what's going on with that group, and what's going on with this technology. And it's 5 years ago, I was like, yeah, I don't know about this place. But now I can't wait to go. It's crazy. It's going to be my busiest convention of the year. I'm booked like solid.
Long days.
Yeah. My boss is going to like this. I only get to play golf once this year. So I'm like, oh man, I can't go play golf again. I'm like, but very cool. Any final thoughts or anything, Kari?
The one thing that I realized I didn't mention at all is I think just another positive thing when it comes to outsourcing accounting is from a control perspective. I think that companies can have a lot to gain from knowing that different tasks are properly segregated. You know, when you have in-house accounting departments, sometimes they could be small accounting teams, they could be stretched thin. There could be individuals that have roles and rights and responsibilities in the software that let them do too many things that could cause opportunity for fraud or unethical behaviors. And I think by eliminating that opportunity in outsourcing their accounting work or just functions of their accounting work can help give owners additional comfort that there is no unethical behavior or fraud happening within their organizations.
Do you see that a lot?
I see segregation of duties issues a lot.
Yeah.
Yes.
Okay. And then what about fraud?
I have seen it. I wouldn't say that I see it a lot at the accounting office level, but yes, no, it for sure has happened.
I mean, there was a big thing here in the Milwaukee area, a big manufacturer of headphones. I won't get too into it, but the CFO there was literally making some changes to the accounting and over 10 years stole like $6 million and had warehouses of like purses and bougie clothes and everything. It was just like an addiction or something. And we're like, how can that happen? Like, how can that happen? How can she funnel out millions of dollars from a corporation for that long without anybody seeing it? So, so if you outsource it, we have duties and indemnifications and fiduciary responsibilities that it can't happen. And it's assured that if something were to happen, we're on the hook for it. Sure. If you got an employee, it's just, that employee is solely responsible, and technically you are too. Oh, you just gave me an arrow in my quiver in some pretty big sales negotiation. But hey, you ever think of fraud? Get them real scared. Be like, get real scared. Be like, just to let you know.
Yeah,
Well,
but you think about it from anything that involves cash, anything in the cash process that somebody in your company has control over or access to, it could happen. So if somebody is receiving invoices and also setting up new vendors and also submitting those invoices for payment, if there's no one else that has a set of eyes on that, or even just somebody having the ability in the system to do all of those functions, even if it's not part of their job responsibility, puts a company at risk.
right.
For somebody creating a fake vendor or a fake invoice and getting them fully set up and fully paid without anyone else needing to approve it because they just had the access rights within the system to do so.
That has to do with a lot of the technology too.
It
So,
does.
yeah, I know.
Understanding the limitations and what the access in the technology truly means.
That's a good thought. Huh.
I'm
I don't
ending
got
us
any-
on a high note here, Nick.
No, it's good. So obviously we've had a lot of success with clients, multiple clients that we work together. We brought GBQ to the audit. And for our listeners out there, I'm going to say it. GBQ has been one of the best firms to work with, and they also offer one of the fairest prices out there. When we hear audit, we go, who are you using and what are you paying and why? And then if we're the outsourced CFO or if we're just their controller or whatever, we want to know what's going on with the audit because we don't want this big, huge, complex audit coming to us that we got to work on. We would prefer somebody with experience that offers a fair price, that's always looking in the best interest of the client, makes our lives easier, makes the audit's lives easier, and in return, the client is very happy. So let's spread that to the world, that there should be more GBQ, GSS, client relationship and collaboration.
Yes. And I will say, near the end of the audit that we most recently worked on together, I spoke with one of the owners, and he stated that this was one of the easiest audits, and it exceeded his expectations.
Yeah.
And I
And
think
that's why we're
that is a
taking him out to dinner.
testament to both of our teams.
Yeah. And that's why we're taking him out to dinner and make sure he tells all of his friends. Hopefully he's got a lot of friends. No,
Hopefully he's got a lot of friends, yeah.
thanks a lot, Kari. We will see you in Vegas I'll see you Sunday night. I'll see you, a couple days.
Yes.
Awesome.
Thank you for tuning in to The Financial Advantage with GSS, the video series for restaurant CFOs and financial professionals striving for operational excellence and strategic success. If you found this episode insightful, don't forget to subscribe to The Financial Advantage with GSS on your preferred platform, or visit gsslp.com for additional resources. We'll see you next time.